Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So once again, Tesla posted record after record after record on their Q3 2020 earnings. In this video, I'm going to run through very quickly and briefly some of the highlights, some of the key numbers and some of the things really worth paying attention to in Tesla's Q3 2020 results. So let's get into the video. But first, hey guys, if you live in the US and would like up to 2 free stocks valued up to $1,600 each, use the link in the description to WeBull and deposit $100 in your account. Each of these stocks will be a minimum of $8 in value. So if you suck at math, that is a 16% ROI on $100. Not bad. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. And guys, just for your info, I will actually be posting an in-depth analysis of Tesla's Q3 earnings and the earnings call soon. But in this video, I'm just going to go through some of the key takeaways. Let's go. So here we are, guys. Let's run through some of the highlights. Now, cash, of course, this is a big one. A $5.9 billion increase in cash and cash equivalents to $14.5 billion. That is an absolutely colossal amount of cash to have available. The majority of this came from Tesla's recent stock offering of around $5 billion, but then there's another billion to account for, which is Tesla just printing money. And this is just the beginning stage. Look out into the future. Just imagine, go back in time, Tesla's revenue, Tesla's profitability, Tesla's cash in hand, over time, up. There's no end in sight. This is very important now because we're well beyond the point of, Tesla can't make a profit. So if you hear that anymore, in the bin with that opinion, you're talking to an absolute clown and it's not worth even listening. Operating cash flow less capex, free cash flow of $1.4 billion in Q3, okay? Tesla put another $1.4 billion in the bank because of their operations. This is just insane, okay? Imagine every quarter. That's almost enough to build a gigafactory every quarter. Insane. Profitability. $809 million GAAP operating income. Now, the 9.2% operating margin in Q3 is absolutely insane. We'll touch on this a little bit more soon, but this is a mind-blowing quarter. This is a point now where nobody on Wall Street with any intellectual capacity can doubt Tesla's inevitable dominance over the next decade. You look at these numbers, you understand the trajectory, you think, I know thinking hurts a little bit, but if you do that step, you just can't doubt them anymore. 331 million GAAP net income. Record vehicle deliveries, profitability, and free cash flow, as I predicted. First step of full self-driving beta rollout started in October 2020. Now, we've seen this recently overnight. Some footage has finally appeared of these people that are in the beta program trialing the new full self-driving build, and it is incredible. More on that soon. Summary, third quarter of 2020 was a record quarter on many levels. Over the past 4 quarters, we generated over $1.9 billion of free cash flow while spending $2.4 billion on new production capacity, service centers, supercharging locations, and other capital investments. Tesla continues to expand and grow. During this next phase, we are implementing more ambitious architectural changes to our products and factories to improve manufacturing costs and efficiency. So as we've seen, the gigacasting, the octovalve heat pump, all of this kind of stuff now, this is where Tesla is at. They're continually improving and optimizing and finding new ways to do more with less. So those numbers are just going to look better and better with every subsequent quarter. Now here's the financial summary. Only one figure that I care to focus on today. Automotive gross margin, 27.7%. Look at the trend. Q3 2019. 22.8, 22.5, 25.5, 25.4, 27.7, marching steadily towards 30%. How many times have you guys heard me say this? We're almost there. And even if you back out the regulatory credits of $397 million, there is still a huge 20+% margin on their vehicles, and it's still early days. They're still only producing around 500,000 vehicles per year. Again, project into the future, and this doesn't even account for the ever-growing software component. Revenue. Total revenue grew 39% year over year in Q3. This is insane growth. 40% revenue growth year over year on an enormous company that's doing $25+ billion in annual revenue. Anyway, let's continue. Quarter end cash and cash equivalents increased by $5.9 billion to $14.5 billion, as we've mentioned previously. Now, one more time. They have almost $15 billion of cash available, okay? That is enough to build half a dozen or more gigafactories, see them through another financial crisis, a pandemic, almost an extinction level impact event, to be honest. Tesla's in such a strong position now. And out of interest, if you guys want to do a little bit of homework, jump online and find out how much cash versus how many liabilities do other automakers like maybe Ford and GM have. You might be surprised at the results. Now, the operational summary, again, 2 key numbers here. Total production, 145,036 vehicles. What's interesting up here, we'll notice that the number of S and X that were produced has more than doubled quarter over quarter. Now, yes, Q2 was a bit of an exception, pandemic, blah, blah, blah. But this is really nice to see a bounce back in those high margin vehicles before the Plaid Model S has been released. Now to vehicle capacity. Straight over to the right column here, Tesla is showing us their total installed capacity. This isn't actually their ability to produce. They can't produce at these rates because you've got downtime, holidays, all these kind of things. But irrespective of that, these are the numbers to focus on. Capacity. Between Fremont and Shanghai, we have 840,000 units of installed capacity. Like, this is nutty. We recently added a third production shift to our Model 3 factory. This was reported around the time. This means that Tesla is absolutely cranking now in Shanghai, working non-stop effectively. Onto the core technology. As I mentioned earlier, the full self-driving rewrite is a game changer. We'll discuss that more in a future video. Vehicle software. Our Model Y all-wheel drive customers can now purchase a $2,000 software update that improves the 0 to 60 time to just 4.3 seconds. Now again, we've talked about this in the past. The over-the-air improvements and upgrades are money printers. Literally, it is software. Bit of code. You pay $2,000, Tesla presses a button, now your car accelerates faster, and Tesla has just printed $2,000 of almost pure margin revenue out of their existing install base. You guys can see where this is going. The infotainment, the upgrades, all of these kind of things can happen where customers can become a future source of high margin revenue after having purchased a vehicle from Tesla. Incredible. This is going to continue to push their margins higher and higher and higher. And every time Tesla can squeeze out a little bit more range or acceleration or top speed, they'll be able to release another update or an upgrade. You can pay a little bit more and make your car even better. And now onto the battery and powertrain. Obviously, this is relating to the stuff that we saw at Battery Invest today. We believe CapEx per gigawatt of battery capacity should decline by 69% compared to today's production process. This is an enormous improvement. And of course, here's a visualization of the new full self-driving rewrite. As I said, we'll go into more depth on this later. This is mind-blowing progress. For those of you who are like, I don't get it, that's okay. We'll cover this soon. And now onto the energy business. Just briefly, our energy storage business reached record deployments of 759 megawatt hours in Q3. This is enormous, almost doubling from the prior quarter. And total solar deployments more than doubled in Q3 to 57 megawatts compared to the prior quarter, with solar roof deployments almost tripling sequentially. So Tesla here are continuing to ramp up and improve and hone the installation process for the solar glass roof. They're also desperate to find and train more installers. This product is ramping up, but at this point in time, the process of installation is where they're really focused. And now for the outlook. We have the capacity installed to produce and deliver 500,000 vehicles this year. While achieving this goal has become more difficult, delivering 500,000 vehicles in 2020 remains our target. Now, I predicted this in Q2 of this year when everyone was freaking out, crying in the corner, scared, selling their stocks and whatever else because the world was ending and you may as well just sell everything because we're all going to be dead tomorrow anyway. I said, in no uncertain terms, Tesla will not update their guidance. They will reiterate they're on target for 500,000 vehicles per year. And they did. And they've done it again now. Tesla, this is going to be a stretch goal, but this is what Tesla's aiming for, and I believe they will achieve it. If not, they'll fall only marginally short. This is enormous. This is guidance. 500,000 plus vehicles that Tesla released in 2019 before the pandemic, and they're still on track. That should tell you everything you need to know. And cash flow. We should have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. In other words, Tesla has way more cash than they need, and they're going to continue to generate way more cash than they need for the foreseeable future. And just a couple of quick updates visually. We can see here the Model Y factory in the foreground in Shanghai here, and then the Model 3 factory in the back there. This is really important to understand. At this point in time, Gigafactory Shanghai capacity is around 250,000 units per annum. Ultimately, this facility will be producing 1 million vehicles per year. It's only at 1/4 of its ultimate capacity. Now, maybe this is a hint, maybe not, but we're seeing the Model Y die casting machines. These are absolutely fucking massive. For scale, there's some people over there. You guys can get an understanding of how gigantic these things are. Now, this to me looks like, when are they going to be producing Model Ys in Shanghai? They've got the casting machines there already installed. Not going to be long, guys. Stay tuned. Don't drop the soap around these guys. New paint shop here as well. And then check out this. Gigafactory Berlin. This is the Model Y factory. This is what's going to be coming out of the factory first. Look at the progress of this thing. It was a field of trees, by the way. It was an unnatural planted forest designed to be felled in the future for all you people that were freaking out about Tesla cutting down trees. By the way, they planted 3 times as many as they cut down anyway, so fucking relax. But just wanted to point that out. This progress is insane. And then we come to Austin, Texas. Again, look at this thing. It's coming along so quickly. This time next year, there's going to be vehicles being produced in this facility. Mark my words. And finally, I just want to look at the trailing 12 months data. This one page on the report should show you everything visually you need to see. The trend is your friend. Look at this. Vehicle deliveries in units. Just look at that trend, okay? Q4 2017, we're at 100,000. We've quadrupled by Q3 2020. Now we've got operating cash flow and free cash flow. Again, look at this. Those blue, beautiful blue lines and the red. They've gone from negative to very positive. And again, the trend, look over time. And finally, net income. Bleeding money, bleeding money, bleeding money. But again, they were investing in growth and scaling. This was not unexpected. This is obvious. You're ramping a new product, like, duh. But look at the trend now. Oh man, we've gone from our losses and then bang, positive, positive, and the trend. Just imagine in the future. This is where Tesla is headed. I know I keep harping on about this point, but so many people still don't get it. I mean, if you have somebody that doubts Tesla's viability, their financial viability, their ability to just send them this one page. This says literally everything you need to know. If you can't infer Tesla's future based on this alone, maybe just give up. Now, I could pick through all these financial statements. If you're a numbers nerd, go for it. But I just want to point out one final figure. Stock-based compensation. This quarter and this quarter, the difference between these two quarters here, $347 million and $543 million, okay? That's about $900 million that Tesla has lost in the last 2 quarters allocating capital for Elon Musk's CEO-based compensation plan. So if there's any numbnuts that imply, oh, Tesla can't make any money without regulatory credits, maybe you want to point this out and say, okay, that's fine. Maybe we can pull out the regulatory credits, but then also the non-cash expense of stock-based compensation, because for those of you who don't know, Elon Musk doesn't actually get paid money, he gets paid stocks. And effectively, when Tesla needs to pay Elon Musk some stocks, they poke a few buttons, press a few numbers, and it's done. They make the shares out of thin air effectively. So this is a non-cash expense. You can get rid of this and you can get rid of the regulatory credits, and then you can see where things wind up. If you guys are after a super in-depth analysis of the earnings, maybe check out Tesla Daily, HyperCharts, Financial Education, Meet Kevin, or somebody else along those lines. My job here today isn't to be somebody else. It's just to give you guys a real quick, general, and brief overview of the things that I thought really stood out in the financial results. Stay tuned for an analysis of the earnings call and plenty more soon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and stake using the links below. Open a new WeBull account, deposit $100 and you'll get 2 free stocks valued up to $1,600. And stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.